Soybeans pushing higher ahead of the latest supply-demand report from USDA, while cattle couldn't keep that rally going. Ag Day's Michelle Rudd joins me with more analysis from here at Top Producer Summit.
Well, livestock futures ending lower on Tuesday, but grains were mixed to higher. Dan Bossi with Ag Resource is joining us. Okay, we did have the WASDE out. February is usually kind of a place card holder, but we did get a lower ending stocks number on corn. Were you surprised with the increase in exports?
I was. Normally, I was expecting that they wait till March. Pace analysis does generate or does validate that export increase, but USDA likes to usually wait another month, get beyond half the crop year, and then raise in March. I give them credit for raising it this early. It needed to be done.
But a sideways day in the corn nonetheless.
Yeah, no, it's sideways because we're still left with 2 billion bushels. I mean, it's still a lot of corn. And so the market is also sensing that our friends in Brazil and Argentina are dropping their prices. They're now more competitive than the U.S. Gulf, and that's got traders nervous about competitiveness going forward in terms of export demand.
Let's talk about soybeans. USDA left ending stocks unchanged at 350 million bushels, but we raised the Brazilian crop 2 million metric tons.
Yep.
Market didn't care, did it?
Market didn't care. The market's been hearing about a Brazilian crop of 180 plus now for weeks. That wasn't in the background. What the market cares about is China and what it will be the biofuel policy from the RVO SREs when we get them in March. So we're adding premium accordingly, hoping that there's better demand.
How much more premium do we need to add to the soybean market before we get confirmation of any business?
So we will go into the Lunar New Year holiday next week. And if we don't get new business, then it's a week of no business. And then we're looking at maybe Trump going in the first week of April. My suspicion being if we don't get some business for the Lunar New Year holiday, the market will start to react. So we need to see China at the Gulf or PNW buying some U.S. soybeans relatively soon.
How much of the extra 8 million metric tons do we need to see for the market maybe to retest the November highs?
So the market right now, from our analysis, is dialing in somewhere between 4 and 5 million metric tons of demand to China. If we get to 8, we can maybe make it to 12, but at 11.50 on May soybean futures, I've got ending stocks around 250 or 300 million bushels in the U.S., and that's where I think the market needs to be today.
And cattle market setting back, profit taking, we're getting a little tired or what?
Yeah, we're getting a little profit on profit taking. We're also concerned about packer margins. Increasingly, packers are coming under financial stress based on the $300 to $500 they're looting for each head they process. So with that in mind, the market's thinking forward and saying, we've got a high price right now. Can packers withstand this for long periods of time?
All right, thanks so much. Dan Bossi joining us with Ag Resource. That's Markets Now.